Hello and welcome to the next episode of a reconciliation. So previously we discussed about the loans, loan types, loan syndication, how it works. So today topic is very important, how the contract gets set up into the system. And daily basis we are doing the reconciliation, how the rollover, pay down, interest, how that thing get populated automatically in system, and then we do the reconciliation. So before this notice come, how the contract gets set up. So contract gets set up means how the buy and sell contract gets set up into the system, and then automatically the system will produce the rollover, pay down, whatever the activity that contract have, the document have, like fees, many types of fee, upfront fee, administration fee, legal fee, and how the interest and rollover pay down get calculated, what interest type, anything. So how it's set up. So first we have to set up a buy and sell tree. So we created one example how the buy and sell contract gets set up. So here we can see we have a buy, by simplify, we just simplify this example with a borrower and lender. The borrower is maybe anything, the financial institution which have the hedge fund group or private equity firm who want to launch some new fund or some project they want to invest, like in infrastructure or maybe anything. So they, for this example we have taken, they want to launch a new fund. So they reached to the SBI, and SBI said that we did not have, we want to not take much risks on this fund. So they arrange some co-arranger bank like SDFC, ICICI, and Kotak Bank. So for that example, we can take that they agree to pay the term loan amount. The borrower requested to get amount of a 10 lakh rupees. So the amount is huge, like 10 lakh crore rupees, but we take example of 10 lakhs to understand this example simply. So they agree with the 10 lakh amount, and this term loan amount get, if you get some notices or some detail with your reconciliation, the term loan amount should be the big, and the drawdown capital commitment is something like withdrawing from the total commitment amount. The commitment amount is here to just link that, uh, to understand that I am explaining. The term loan amount is something is a commitment amount. The commitment amount is here is 10 lakh rupees, out of which they have what they have withdrawn. So it's called as a withdrawal capital call, capital commitment first. So they withdraw as 2 lakh rupees out of 10 lakh rupees, because if uh, if lender is there, so they will not give full amount at one go, they will give into some batches, some cycle they will release. So here the first cycle decided on the uh, January 1st, 2024 as an example. So they got a amount of a 2 lakh rupees. So in 2 lakh rupees if they get amount, so they have to pay the interest, rollover, term loan, interest or pay down on this part. So the interest and pay down is something like calculated on the what the contract has said. For example, in this scenario we taken the example of 5%. If you calculate 2 lakh rupees on the 5%, so it will charge 10,000 rupees. So they have to pay 10,000 rupees as a monthly. After that, on the 5th January 2024, their fund manager got an opportunity into the market to invest something. So they release one amount, like out of 2 lakh they release 1 lakh 50,000 to the fund manager account. So here the role of a master and feeder is come. The fund get allocated to the master account, and the fund manager want to invest somewhere into the stock, bond, swap, anything. The fund get allocated to the feeder account, and then feeder account get directly connected with the broker or maybe the custodian or maybe the trading account something. So there the trading has been done. So for example, here we can take example, they want to invest, a fund manager want to invest around 1 lakh 50,000, but the master to feeder that amount is going, or the some organization are different, or other than some other word they are using. So if the fund get come for the investment purpose, if fund manager is asking, so it goes to the subscription part. Okay, so when the entry get passed in accounting form, you can say entry get passed to buy something, it goes with the subscription part. So in subscription part, the amount goes to invest into the stock, and then the purchase will be done of 1,50,000. For example, we taken the example of 1,50,000, out of which if this got sale, if you invest or if you do something, if got sale, if you get a profit of 10,000, 20,000, 30,000, anything, then the fund manager again pull this money to the main account, like master account or the main account they have, where the 2 lakh rupees came at a capital call or capital commitment. So main account, so it goes as a redemption entry to the trading account to main account, or maybe we can say the broker account to the main account. So it goes with the redemption entry. So you came to know this, if why subscription redemption is doing. So this is a process we are doing. So we get to know here as a daily some fund or some markets are there where we get a daily interest if we invest there. So this term is called as a sweep in sweep out. So if you get we can say the money market instruments are there on the daily basis, they are if you invest for the hourly basis, they are giving the interest to them. So what in this case 2 lakh rupees is gone, came on the 1st January, and if 5th January they have invested into the 1,50,000 in one stock, and then 25th January they have withdraw whatever the profit they got. But here the scenario is that the 50,000 is still remaining into their account, is unfunded. Okay, so in unfunded, what will do, the fund manager will withdraw, just put into the sweep market or money market. So they get if this amount is in the account, they will not get any return. So they invest for the short term. The short term amount may be the overnight interest, they are getting 200, 500 or 1,000, 2,000, anything. So that is also the income from the perspective of a fund houses like hedge fund or something. So in this way they have set up a contract of a February 1, 1st March, 1st April, 1st May or something. So this how the cycle of thing is work. So in middle, if this cycle is done, so in if cycle is done, then same part will be repeated, like you get a think of a interest, pay down, fees, anything will become. So in middle part, if contract gets set up, or the term will come that drawdown, capital call, capital commitment, interest, pay down, all things. So the interesting part is there, you heard about the rollover term also. The rollover term is nothing. If this contract, if you calculate this thing and the row, the column C, around 10 lakh rupees they have withdrawn. Okay, they have invested again, they came to the master account. So what happened, the lender, the SBI, SDFC, ICICI, Kotak, we take an example, maybe the other bank also came, we take as a just an example. So they came to know this fund is doing time to time payment to us, time to time giving interest to us, and there is no some time of default or something, like a confidence we gain it. So again this fund has requested to just this is 5-month contract, they want to get again some contract of a again 5 month. So just they have to do the rollover. one term is there, again they want to not do some documentation or something, this contract get again rollover for again 5 months. So this term is calling as a rollover term. So in this again the 10 lakh rupees SBI released to the borrower. As a part of this again the contract gets set up, and again the thing will come in roll interest and pay down and fees and all. So this way the loan syndication flow has worked. So hope you like this part. In short we have discussed this, but every term we have created separate session for that. Hopefully in next coming week or coming month we will release one by one. So please do not forget to subscribe this channel, as well as like this channel, or as well as if you have any doubt in your mind into current or organization you are working or daily challenges you are getting, please ping into the comment section and we respond to your channel. If you want to say any feedback, you can just put there. We definitely work on this part. Thank you so much. I'll meet you in the next part. Thank you.